Thank you all for joining here today for this webinar with our respected panelists in CDR, where we cover the access models in particular, but also better understand the use cases and dig deeper and demystify some of the challenges within CDR. My name is Rehan. I head the partnerships and marketing at FinTech Australia. And yeah, we're keen to be part of this amazing session. Before we begin, just a quick introduction from our panelists. I'll hand it over to each individual panelist to make their introduction, and we can start from there. Over to Jill to start with.
Hi, I'm Jill Berry. I'm CEO and co-founder of AdaTree. AdaTree is Australia's for-purpose or purpose-built intermediary. So we enable companies of all industries, sizes, and use cases to become part of the CDR. We also support all access models. So here to talk about what we've been up to. Over to Erica.
Okay. Hi, everyone. My name is Erica. I'm co-founder and CCO at Assurance Lab. In the past 4 years, Assurance Lab has been working with some of Australia's most exciting tech companies, helping with their cybersecurity audit needs, whether it's a SOC 2 report, an ISO 27001, or an ASAE 3150 for the CDR. To date, we've helped 4 clients achieve unrestricted status, with about a dozen more on the way. Over to you, Adam.
Yeah, good day, everyone. Adam Grokey. I'm the founder and CEO of Sherlock. So we're a platform for mortgage brokers that helps them with retention. So we predict who's likely to leave from their existing clients. We lower their rate to a more competitive home loan interest rate with the same lender. And then we are working on single-click refinancing in the marketplace. So CDR open banking data is very critical to our journey. So very excited to be on here. Thank you.
Thank you all. So quick housekeeping, we're open to questions through the session. If we cannot cover it in between as we go through the questions that I've prepared, feel free to still ask them, put it up on the chat or in the Q&A that you see below, and we'll try to cover all of them before the end of the session. So a quick highlight from the past few years, I guess. FinTech has continued to thrive. With the big star open banking now a critical part of the design of Australia's data and digital economy. All major and non-major banks have completed implementation of CDR. Last I checked, there are currently 103 data holders covering 98% of the consumer data and 28 accredited data recipients. The government in October 2021 revealed the broadening of open banking through intermediaries, allowing consumers to share the data with trusted advisors and for bank data to be used by non-accredited parties that are sponsored through the intermediary. CDR is now going broader than open banking and open energy, which includes open telco and open finance. As part of open finance includes superannuation, general insurance, non-banking lenders, and merchant payments. FinTech Australia has consistently supported the implementation of open banking in Australia in consultation with our open data policy working group, which has all our members, which are about 400 of them. We have made multiple submissions to build an efficient and effective open banking framework. So now, in addition to the unrestricted ADR model, there is the sponsorship model, representative model, collecting outsourced service providers model, trusted advisor, and CDR insights. But without further ado, questions to our panelists. Firstly, to Jill. Let's start at the beginning. What were some of the challenges of being an early adopter of CDR as a data recipient?
Yeah, so I've been working on CDR exclusively for almost 3 years, and geez, it's been a really long journey about just understanding what to do, getting data holders live, doing some early testing with some of the majors, and just they all have to do the same thing, but it's a challenging journey for data holders to be able to share data or consumer data, and then of course just being able to receive it as well. Being able to receive it has been a very big part of the journey. So I think that some of the challenges of being an early adopter is just having a really clear use case and ultimately just having to go navigate a whole lot of legislation, rules, and interpretation of them, because there's 243-ish pages of legislation that's not even looking at the standards that you have to essentially sift through. And as much as I would like it to be black and white, there's a lot of gray in it as well. And you're like, oh, do you mean this? How does this apply to my use case? And you really have to get deep into it, whether, asking regulators for clarity or just getting legal or audit advice on it. So there's a lot of questions on it. So I think some of the early challenges would be like just actually getting the unrestricted accreditation ourselves. AdaTree as an intermediary, we actually originally didn't plan on getting accredited, but if you collected the data, then you actually had to be accredited. That's changed right now. So that's the equivalent of being a core banking platform and having to get a banking license. So I think that was a big challenge, figuring out, well, how do we get accredited? What are all these policies? What are the processes? What's the governance requirements? What's the audit requirements? A lot of early data recipients, they had the vision for the use cases, but they had a long way to go about how to be compliant and how to meet all the governance requirements. So I think that was a challenge in itself, but luckily that's not a program of work, that's just a project. And then some of the other challenges are actually, all right, well, once you're accredited, it's a bit of a wake up call, because once you're accredited, you actually don't get access to the data. So like, all right, so how do you get access to the data? So just figuring out, you might think, oh, it's just some APIs, let's just connect to the banks, but it's anything but that. It's actually really quite complicated to do so, and it constantly changes as well. So I think that's been interesting. It's been almost like building as it's being designed, working with a data standards body, being part of consultations for the data standards, and then actually implementing it as well. And then a bit of teething problems once actually implemented. So I think that it's come a really long way in terms of accreditation processes. But what I love about the government and their response to it is that they've heard people say, this is too hard. Surely there would be an easier way. So I think that the introduction of these access models is a direct response about that. How can you bring your use cases to life, uphold the consumer protections for security and privacy, but still make it much easier? So I think that's a bit of an overview of my past 3 years.
Thanks, Jill. I'm glad you've nerded out on all the reviews and helped us through most of the consultations as well. And yeah, you've had a huge impact on the industry, and always, I'm sure the industry is grateful for that. Thank you. So moving on to Erica, from a compliance and security point of view, what have been some of the challenges you've seen in the industry?
It's actually similar to what Jill touched on. So at a high level, there's the main challenges we've been seeing are like difficulties in translating the compliance requirements into practice. So a lot of the clients that we've been talking to, they're really experts in their industry and they know their products really well. But then you read the rules and there's confusion around, okay, what does this actually mean? Like say one of it is you have to maintain an information security capability. What is that? What does it actually look like in practice? So there's really, I guess, like a real balance that you have to hit between making sure you meet the requirements, but I guess in terms of like the way you meet that, making sure it fits your business. So one, it doesn't just become a box ticking exercise that doesn't mean anything or doesn't add value. And two, that it doesn't become too burdensome that you're just doing it for the sake of it and you're doing all these compliance things without seeing the value of it. So it's really knowing your business and implementing, I guess, the rule, designing, implementing your controls so that it serves the business and meets it. So at Assurance Lab, we actually have this free software that takes out a lot of this complexity. It only takes around half an hour to complete. And by the end of it, it's completely free. You will get an output report of your current control practices. So there might be, so we've already actually translated the rules for you to see what that looks like in real life. So that will already map out which of the rules, I guess, you already meet just from like your day-to-day business activities. But more importantly, it will also highlight any gaps that you have and also recommendations on how to remediate them.
Thanks, Erica. Definitely streamlines the process for a lot of people interested to understand the space.
Yep.
Moving back to Jill, what is the new representative model and how does it make fintechs' lives easier?
Yeah, so the new representative model essentially means that there's companies and for the who can access the CDR, so get consented CDR data. And for the first time, they don't have to go through unrestricted accreditation themselves. So the same way it is actually what happens in payments or AFSLs, that instead of you being a direct connection, you actually work with a company who sponsors you as an agent. So this is really similar of what happens in CDR. So if you want to get access to CDR and you just care about the data and bringing a use case to life, you can easily be a representative. So you'd work with an unrestricted, accredited and active CDR, like AdaTree and ADR. And we would essentially go through a process to make our use we have to do an assessment of you, and then we'd have to register you as a representative. So you'd still have access to our technology, our APIs, so you can still get consent management, the dashboard, and ultimately bring your use case to life. But you rely on our legislation instead of being regulated and accredited on your own. So ultimately, this would save you months of effort, a whole lot of money, and ultimately your opportunity cost of doing something else that that your business is really focused on. So it makes fintechs' lives easier because they still get the same, or whether you go through your full unrestricted accreditation or you're a representative, that you get the same exact access to the consented data. It's not like you get a limited data set. So you really get all the benefits, but none of the burden. A really important caveat is that there's no shortcuts to anywhere worth going with this. So if you think, I don't want an information security posture, I don't feel like doing penetration testing. No, you can actually avoid that. You still have to abide by the CDR rules and have the security requirements and actually meet them. That's kind of the cost of doing business, really, if you're going to be handling financial data. So it works well for companies that have a fair amount of that in place already or ready to undertake a compliance program. Again, this can be done in weeks. We're not looking at months, and we're not looking at something really onerous. So you're not decreasing any steps other than regulation.
Thanks. And we have noticed that this will definitely increase the uptake of CDR in Australia. Moving on to our silent panelist for now, Adam. So as Australia's first mortgage broker retention and refinance platform using AI to predict loan book churn and providing brokers with single-click repricing and refinancing, Adam, walk us through your journey navigating the goals of the organization, and how did CDR play a part?
Yeah, absolutely. I mean, I think any sort of fintech, and especially early stage fintech, you've got a really sort of bold mission and vision of where you're taking your business, and sort of the problem we're solving is helping mortgage brokers keep clients and predicting churn. So and one of the best ways to do that is through data insights and AI to leverage patterns in the modeling that we see from the data. So it was very much early in our journey. It was something that we knew we had to be a part of, and we had to play in this space, and we had to somehow make sure that we were at the right time. And I probably stress at the right time, because we could have been very early in the journey and it could have been a huge distraction for our business. But at the right time, we had to participate, and we had to participate in a way that we could extract the value to then actually help on our mission. So, current state of our platform is we provide brokers with a single-click retention option. We also have in our pipeline, and we're developing it at the moment, single-click refinancing for home loans. So that's just not it's just not possible without actually having CDR data, without having access to that, without getting the buy-in from the consumers to participate in and consent in that sharing, so that we can actually facilitate, you know, those single-click retention and single-click refinancing. So very early on, we knew we had to be a part of it, and we decided not to participate too early, because being a, you know, early stage fintech, you've got limited resources, you've got limited capital, and it looked very expensive early on and very confusing, where the lay of the land actually wasn't quite set, and we knew that there was going to be multiple iterations or changes, and we just didn't have the time or the resources or the ability to actually stay ahead of that to see where that was going to land.
Thanks, Adam. And since I didn't ask you any questions before, my next question also goes back to you. Why did Sherlock choose the CDR representative model, and what were the deciding factors?
Yeah, I think sort of touching back on that point. So, I mean, early on, I mean, we knew we had to be a part of it. We knew it was going to be a game changer for the industry. You know, when something comes out that's so new, and you know it's going to change, and you know it's going to go through multiple iterations. I mean, we kind of had a look at it and we assessed it and went, okay. I mean, at that point in time, we were sort of forecasting it's going to be cost anywhere between sort of 300 to 900,000 in total time, cost, people, and effort. And you look at that as a fintech, and you go, well, what if we actually put that into attracting consumers and our customers at this point in time? And that's a much better return on investment for us at that point in time, especially when there's so much uncertainty about what the models look like. And then as we were watching it and we were watching it unfold, we kind of went, okay, look, this is something that we kind of got the feeling that we could come back at the right time, which is, you know, which was only a couple of months ago, and there'll be new access models that are going to be much easier for fintechs to adopt. Because early on, like, to be honest, it was way too hard, and it was too hard and it was too expensive, which also meant that you're not going to get that mass adoption or that critical mass of adoption through fintechs and through businesses that are actually helping consumers. So I think the changes are absolutely in the right way. And I liken it to probably two things. I liken it to, like, if you're going to go and you're going to travel to, say, Fiji, right? The borders are open now, which is fantastic. But if you're going to go to Fiji, you can choose, I mean, you can fly there, right? So you can choose, do I build a plane? Takes me 2 years to build a plane, and then I've got to fly my own plane over to Fiji. Or do I charter a plane and I do a private charter with 10 people, and that's very expensive, but I can still get to Fiji? Or do I just grab a commercial ticket, one ticket, and I can fly there and I can jump on the next plane in 2 hours? So I think that's kind of like a little bit of an analogy for how this works and where the decision comes with a business is, the destination's actually still the same. It's the time, it's the cost and the complexity of actually getting there. And do you want to invest that time now? And also, is it worth it for your business? Now, I'm not saying what we've chosen is right for everyone, because you've got to make that on your own individual business. But we decided for this model because it allowed us to push our resources into our development, into attracting customers, into building our platform. But at the end of the day, we still get the same data, the same access, and we're achieving the same thing in a much shorter time, in a cost-effective manner. And you've also got the ability to change that down the track as well if your business changes.
Thanks, Adam. We have a question from Chris that I'd like to touch upon right away for both, I guess, Jill and Adam. He did ask, what are the direct benefits to the unrestricted ADR sponsoring and organization? So first, before we get to that, Adam, you mentioned all the pros of going with the representative model, but did you see that you had to give up on anything particularly around ADR and not getting your unrestricted ADR? And what would your advice be to other fintechs when they look at both options?
Yeah, look, good question. I mean, it's one of these things where, so absolutely, at this point in time, we don't feel like we've given up anything. I think we've actually won from waiting and from taking this path. I think, I mean, the longer term of where it looks, I mean, the fact that you can actually go across different access models is a big advantage. So if at any point in time we wanted to change, we can change. And I think that's the flexibility. So we're not pigeonholing ourselves into a position that we can't move out of. Now, that doesn't say that we won't stay on this model or a similar model like forever, because it comes down to a business decision. Is that the right business decision for us as a business to put resources and time and effort? And then is what we're actually getting or gaining from that significantly different to what we've currently got? And right now, and for, you know, the short, medium term that we can see, there's no extra gain from us, from our business case and our use case, going to that next level. So.
Thanks, Adam. I think flexibility is such an important point for people to note. Going back to Jill, and that's almost similar to the question that was asked by Chris as well. How would you go about helping an organization evaluate the right access models for them?
Yeah, absolutely. So we actually have a quiz on our website about it, and it's really comes down to the aspects of the organization and like what they actually qualify for and what they want to do with the data or do with other organizations with the data. So if I have to think about, if I list the access models available right now, so it's unrestricted ADR. So that means you go through the accreditation and, after you're accredited and active, you can actually sponsor other organizations themselves. Any organization can do that. It just takes a bit of, time, money, and effort. And then there's these new ones that it's like affiliate, which you essentially have to do a light accreditation with the ACCC and representative. So this is when, you have no accreditation with the ACCC. And your liability profile actually changes a whole lot. So I think that it's like most companies that we talk to that want to still pursue full accreditation, it's because, or early on, it actually used to be because of they'd get some PR out of it as well. It used to be like quite novel being an early adopter. To be honest, that doesn't really happen anymore. When companies get accredited, you don't really see the articles about it, but you definitely wouldn't do it just for PR. Often you would do it now because if you had like a commercial or like a customer relationship reason to sponsor other sponsor other entities to enter in the CDR. So say for like a commercial reason, say if you had, say if you were a credit engine, or if you were a payments provider, or you were a core banking platform, and your customers were already saying, I want access to CDR data, can you help me out with that? If you went through your own unrestricted accreditation, that means that you could sponsor them in, and then basically help solve more needs for your customers. Again, it really just comes down to what your priorities are, because it can be sponsored by others. They can do their own accreditation as well. It just has to do about business priorities and strategy, really, and largely resources. So that's the main reason that we're seeing for companies still do unrestricted accreditation. If you're for representative, it's largely be like, all right, let's get this done as soon as possible while still maintaining, the strict standards. I care about my use case. I have a deadline. Let's go do it. And then the other ones are trusted advisor. So this one's really interesting, where you can get full access to CDR data for different entities that are regulated in their own right. So think mortgage brokers, chartered accountants, CPAs, lawyers, BAS agents, registered tax agents, financial counselors. They're listed in, I think, section 1.10c of the CDR rules off the top of my head. So basically, if you are eligible to be a trusted advisor, you would definitely be a trusted advisor over anything, because you wouldn't even have to do the representative assessment, the unrestricted ADR, like ADA, we would just have to do a reasonable, we would have to put reasonable effort into basically proving that you actually are a trusted advisor, and then you get access. That's fantastic. So if you can be a trusted advisor, do it. And then same thing for insights. It really has to do about what do you want to do with the data? Now, if you get raw data, so it's like, name, account, transactions, all of that, that's considered CDR data. Now, if you can get a CDR insight, that is a low risk, yes or no. That isn't CDR data. So it ultimately, say AdaTree would receive the CDR data, we would analyze it for, it's like, oh, is this account verification? Does Adam own this account? Does Erica's account balance, is it more than X? Giving that yes or no, we can give that yes or no to a non-accredited company. So as soon as you're non-regulated and you're like, you know what, I just want a low risk yes or no. I want the outcome so I can bring my use case to life. That's CDR insights. So I think it really just depends about, are you regulated on your own, BTA? you just need like a yes/no output? You don't even want to deal with the raw data. Go for CDR insights. Do you want to sponsor other companies to be part of the CDR? Oh, go unrestricted CDR. Nope, I just want to use the data and bring my use case to life, then be a representative. It's a bit more complicated than that, but that's pretty much it.
Can I just add to that? Because I think bringing sort of our thought process into this as well is really, the opportunity is going to be endless with the potential of what can be done with the CDR data and the insights and everything else. And I think that one of the best things about it is that the access model has just made it a lot easier for mass adoption, which I think is fantastic. But from a business's perspective you really need to be clear on what your use case is and your first use cases, because you can get super excited and distracted with all these exciting things, but really defining what your first use case is or your first few use cases will also probably help then define which model, access model you should go down. And that helped us a lot, kind of really defining it to the core. What's our core UVP to our customers? What's our core strategic roadmap? And then what do we need to be able to achieve that? And is it, is it unrestricted access or is it just not? Is it just actually the fact that we need to be able to get consumers to consent to that data so we can go and do our cool stuff with that and help them drive better outcomes? So those real clear use cases actually helped us in the decision as to which model we should go through.
Yeah, I just add to that, actually, in terms of the clients and the leads that we've been speaking to, definitely at the start of the CDR, a lot of the leads or clients were they set up the company for the CDR. They saw this massive opportunity and, okay, I'm going to do this, I'm going to play in that. But actually now that we're expanding to different industries and also expanding the access models, we're actually seeing other businesses whose core business is not around CDR or open data, but they see the potential on how much it can improve their business. So I think it's really just becoming wider as opposed to, before it was just, this is my whole business around open banking. Now it's, yeah, okay, that's really cool. I already have this business, but that's going to make it a lot better. So I think especially I think it's really good for a CDR representative if they don't want to invest that much amount of time or effort, money into being an accredited representative or ADR.
Thanks, Erica. There's a question from Anonymous. Can CDR be used for fast digital onboarding for B2B? So in the B2B space, Jill, do you have, what are your thoughts?
Yes, we actually have one of our clients who's accredited. Should be going live very soon. They are focusing literally just on B2B. Is a lot of people talk about the consumer use cases, but I come from a business banking and institutional background, and I think that there's a huge amount of improvements and efficiency that CDR can bring to businesses. I think that onboarding is really important. Gosh, it's hard to change accounts as a consumer, but it is so much harder as a business. Just thinking about registration certificates and and ASIC evidence. I think that for onboarding, CDR can improve so much of that. And it's not just in banking, but how can you switch across energy providers and in finance and whether it's payroll, a lot of those aspects. So I think that there'll be a lot of B2B use cases specifically coming out. We're actually coming out with we did an original use case report about 25 ways to access CDR for smoother and smarter use cases. We're coming out with a second version of it, looking at non-banking data sets and just getting outside of consumers and looking at CDR for good as well. So we're definitely thinking about that. I'm a product developer by background, so I love thinking about, here's a tool, how can you actually use it? So B2B is a very big focus.
Thanks, Jill. The next question goes to Erica. From a compliance point of view, how difficult is it to achieve representative status? How does that compare to becoming an unrestricted ADR? I know Jill touched upon this slightly, but Erica, your point of view.
Yeah, so I agree with, I agree with Jill's comments from earlier. I think really the key point is, regardless of which access model you use, the security requirements are the same. So it's vital for consumer confidence and the success of the CDR for everyone to ensure that they keep consumer data secure. That's non-negotiable. The only difference is how you actually go about proving that compliance to the CDR rules. So everyone needs to comply. In terms of how you prove it, if, for example, you go for unrestricted, you need a third-party assurance report, ASA E3150, that you submit to the ACCC, and that process takes several months once the audit's complete for the application to be processed. If it's a sponsor affiliate, you still need to comply with the rules, but in terms of proving it, you need to do a self-assessment and then an attestation that you submit to the ACCC that they will again review. For CDR representative, it's the, like Jill mentioned, the profile liability is different. So it's actually the principal who is liable. So they would be performing their own risk assessment and determining what they require from their representatives. Jill can talk more about this later on what they require from their own representatives. But basically the advantage of going through that instead of the ACCC is that usually it's a much quicker process. The representatives and the principals have a much closer relationship. They really understand the business because they'll be providing the data, so they know the environment more. So I think just the interaction and working through the different requirements and what that looks like, it's a much smoother process. So yeah, so in a nutshell, everyone needs to comply with the rules. It's just how you prove your compliance and who you give, I guess, your report to, or who you need to sign off on it.
Thanks, Erica. Jill, do you want to add to that now or later?
I can, yeah, just even adding to that now. When thinking of, well, it's when you do your ISA E3150, just really rolls off the tongue. It's their information security assurance report, completed by an auditor. It is the most black and white thing of, there are 26 technical controls and how you actually have to meet them. And it's a very prescriptive and pretty intensive framework. But when you actually do it with a representative, you have to meet all those requirements, but essentially the evidence level of attestation, everything is only gray. It's very black and white, because then you'd also look at it of being like, oh, well, someone's an ADI. So what are they also subject to for legislation, as opposed to they just started about 3 months ago, they're 3 people. I would require a whole lot more assurance from them as well. But it also isn't just to do, with how old your company is, or how regulated you are as well. It's just about how you use the data. Do you use a managed service provider? Do you have your own internal DevOps team? Do you use our DevOps partner as well? Do you have a one-off consent for your data? Do you delete it immediately? Do you store it for 12 months? Do you de-identify the data as well? So if your principal isn't asking these questions, you should be concerned because they have an incredible amount of liability. And if we go through all these questions with you, it means that we really care. We care about your security posture. We care about the legislation, but also, it's an initial barrier, but we make it as painless as possible to actually go through. So it is gray, but it's for good reason.
Thanks, Jill. My next question goes back to Adam. It is still early days of CDR. Why should organizations avoid the let's wait and watch approach? And why is it so important to be a first mover?
Great question. I think the time for the wait and watch has kind of passed now. The wait and watch was, okay, when there's uncertainty in where the lay of the land is, or where there's uncertainty in where the goalposts are, you can get caught out being an early adopter or a first mover, because you go and spend all this time and effort and you go, well, that just cost us 10 months worth of work. We've just dropped 500,000 on that. And by the time we've actually gone live or executed, we could have actually spun that up in 2 weeks under a different access model, right? So you can get caught out going too early. So I think that time for the wait and watch has actually already been. And the reason why I say that is it's very clearly defined in terms of what the access models are now. And I think there's, and Jill, you can comment as well, but I think it's my take on it is it's unlikely there's going to be significant change now that this has actually been brought out. So there'll be tweaking, absolutely, because, you know, I think that's a good thing to constantly tweak stuff so it gets more adoption, it's easier. But also still it needs to, like, as everyone said, you know, the foundations of security posture and you know, putting the customers' data in a safe, secure plan, managing that properly is so important. So I think that sort of time for wait and see has passed, and now it's a case of going. And what I would recommend to anyone, and if I was going to tell myself what to do now, I'd be saying, well, you know, define one really good use case that meets your UVP in your business and is valuable to your customers, and just start with that one, because it sounds simple and it might be one, but when you actually unpack that and what you're going to do and how you're going to ingest the data and how you're going to manage the consents and how you're going to do that ongoing, and then actually using that data and providing value and insights to that data, I mean, that's a big project in itself just for one use case. So if you start now, it means you can start with one, and then what you can do is you can actually do incremental innovation on that as well and go, okay, well, that actually works, like, because it's either going to work or you're going to have to pivot. So you can actually go and add value to your customers, figure out if it is adding value, and then pivot, or you can then build on that and you can go, okay, what's our next use case? And you can start building out your next one. I think if you were going to wait now for another 6 to 12 months, it just delays the cycle of adding value to your customers, and also delays the learning and adoption for the business. You're better off building it now, starting simple, pushing it out, see if you've got value, and then building upon that. And especially because I do think the lay of the land is pretty clear now, and not significantly likely to change in a substantial way. So I feel you can be pretty confident in the access models where they are now, that's kind of where they're going to stay for a reasonable period of time.
Yeah, I'll just add to that in terms of the data that's available now as well. It's I think you were saying, Rehan, at the start, it's now up to 98%. So there's already really quite a lot that you can do, whereas before it's like, well, these, you know, many banks aren't even on board yet. So what's the point? But, you know, 98% is you can do some pretty cool stuff with that.
Thanks, Erica. Thanks, Adam, as well. Before we go to the questions, I know we're getting a lot more in the Q&A section. So just wrapping up on 2 key questions I'd like to cover. The first is around open finance. CDR is evolving. In Jan 2022, the Treasury identified open finance as the next priority area to expand into CDR. Open finance will bring general insurance, superannuation, merchant acquiring, and non-bank lending service providers into the CDR. So Jill, why should fintechs get involved now, and how does that prepare them for the future industries coming to CDR over the next 12 months?
Yeah, so I would say that a lot of it would be reflective on Adam's comments right now. If you haven't had a strategy or thinking about your use cases for CDR, you can imagine that your competitors already have, and they're probably already starting to work to implement on them. But when thinking about, you know, like what's the greenfield, what's the total possibility? It's one thing if you have, you know, streaming verified transaction data and banking data about, like, you can actually do, like, implement some absolutely wonderful value propositions with that, things that weren't available, you know, through paper PDFs or digital PDFs or even screen scraping it as well. But when thinking about, well, what can you do when banking data is combined with energy, or when banking and superannuation data is combined? How can you actually change the whole general insurance process to make sure that people aren't overinsured or underinsured? Instead of just thinking about it as a compliance obligation and a project, and just thinking about, you know, like, oh, what can I do with banking data? I'd really challenge fintechs to look at the different data sets available, start to be creative, because these will absolutely lead to brand new fintechs, like brand new unheard of unique value propositions when you could start to combine some different data sets as well. I'm really hoping that we'll see some very cool propositions, but also whole new companies formed out of it. Like, I personally think that one of the biggest areas for improvement is general insurance products as well. there's a lot of friction in understanding that, and what the products are, how it's suitable, how it changes over your lifestyle as well. And if you're anything like me, you'd rather do everything on your to-do list than update your super or look at your insurance products when a big life event has changed. So I think that it's important for your business strategy and ultimately for your product roadmap to start to look at it. Is the days of being an early adopter in CDR have passed. We started working with our first CDR early adopter in October 2019, when I looked much younger from the CDR stress. And now we're already working with a number of open energy providers who are like, yeah, I want to be the first open energy ADR. This is my value proposition. And starting to see that from other financial services companies outside of banking. So I think that just looking at the strategy, picking one use case and really focusing on it, you don't have to create something brand new from scratch, but even just improving little parts of your customer experience or process or onboarding just to decrease friction and start to acquire and engage more customers. Like, I get excited about that.
Thanks, Jill. I'd actually like to go back to the Q&A because there are a lot of important questions that we'd like to cover before I wrap up the session. So first is from Lawrence. To Jill, what do you see as a reasonable effort to verify the profession of trusted advisor has stated they belong to?
So if you talk to AdaTree, we have an application form for it, and it's basically there's different classes of trusted advisors, TAs, and you have to basically prove that you are a current member, and you will be for the foreseeable future of that as well. So if you're trying to look for a get out of jail free card, just be like, oh, we're a tech company, but what if we just find a CA within that? No, we have to prove that that your company is that, and that's reflected of their business as well. So we basically ask for some specific evidence. We'll have an assessment done within 1 to 3 business days, and we just want to make it as pretty painless as possible. Whereas things are very gray with oh, show me your InfoSec controls and show me your policies. No, it's are you a registered mortgage broker or are you not? It's pretty simple.
Thanks, Jill. A question for Sherlock. Adam, someone would like to hear more about Sherlock's use of open data. Is it a live feature yet, and how does it work for Sherlock?
Yeah, so we're not live yet. We're bringing that in with our customer portal release, which is going to be released soon. You can imagine. So the user journey and the use case for us is mortgage brokers help out customers get an original loan, and then what happens is, from that point in time, it's stale data. From day 2 of that loan starting, they've actually got no insights, no updated information of what's actually happening. So that traditionally has pushed mortgage brokers into more of a transactional type business model. So what we're looking at is we're going, well, how from a retention perspective and how they can help service their customers on an ongoing basis is what can we do to provide, really simple use cases. What's the current interest rate of that loan? What product are they on? Has that consumer actually, or that client actually called up the bank and then split their loan into a fixed and variable without going back to their broker? So when it comes to a broker doing a review or reaching out, rather than the broker going, hey, I need all this updated information, can you send it all through? You're actually able to flip that on the head and actually proactively alert the broker based on events that you can see from the data. And there's so many different use cases you can do with that. For example, if you can see that there's transactions that are coming through, which have multiple spending patterns around sort of baby stores, it might be an opportunity for the broker to reach out and say, hey, how's life? What are your goals over the next 6 months? Oh, you're going to have a baby. That's fantastic. Well, what about we actually start going through some budgeting? Do you need assistance with that? Should we be considering a fixed rate to mitigate the rising interest rate? So what it does, it gives you the opportunity to proactively engage in conversations. And I think the value comes from the data insight. So the live data for products, the live data for loans, live data for balances, that allows them to add value to the consumers over that journey, where previously it's only been at the time of getting the loan. Now there's endless cases you can do with that, which is super exciting, but it's also, you know, daunting because you can go down rabbit holes. So it's really, for us, it's about bringing back to, you know, what does the broker value? Brokers are our clients. And then what do their consumers value that they expect from the brokers, that the brokers either aren't doing now or don't have the ability to do that now?
Thanks, Adam. A question for everyone now from Michelle, and I hope the answer is not, it depends. What's the estimate costs involved in applying for the representative of ADR?
Sorry, of being a representative or an ADR?
Representative.
Representative. So I'm going to break the rules and say it depends, because right. So ultimately it depends, because it's like, how much work have you done to date? Because if you have an information security policy, if you've done your penetration testing, if you have technical controls and follow, you know, like general security practices, if you have InfoSec internal training already, you know, and training and awareness programs, you're gonna have a really, really easy time, honestly. If you're like, I don't have a single policy, we've never done penetration testing, we're like, okay, it'll take you some time and effort. It's, you know, it's very achievable. Gosh, like we got ready for our unrestricted ADR in less than a month, you know, and we had some things in place and we had to build them as well. So it just depends what your starting point is. If you're starting from zero, you have a bit to go. If you've done a lot of the work, and gosh, even if you have a SOC 2 type 2, like it's really a formality at that point. So Erica, do you have any thoughts?
Yeah, similar to you. I mean, from a representative point of view, basically what Assurance Lab does is we support the principal in terms of how comfortable you are. So like you said, if they're very new to it, you might require a reasonable assurance report. So that's got a different price point. If you're fairly comfortable, then we might just do a limited assurance report, which is like around half the cost, or you may not even need us at all. If, for example, the representative already has a SOC 2 and they've already satisfied a tree with XYZ. So really we come in to bring up the comfort level of the representative if they need additional assurance, or if they've got enough to be satisfied that the rules are being followed.
Thanks, Erica. Adam, do you want to share from your point of view?
Yeah, I mean, all of that's the foundational stuff you should have as a secure, safe business, right? It comes down to your security posture. So it really depends on what journey you are. I mean, there'd be fintechs out there that are just starting the journey and going, hey, like this is really cool, and we've got all these like great visions of what we're going to do with it, but you know, as with any business, you know, the first day you have a breach or you have a security problem is the first day at the end of your business. So make sure, you really have to make sure that you've got those foundations, those solid foundations built. So in the majority of businesses, that's already going to be there, which means then the step up to actually going to an access model is going to be a lot easier and a lot cheaper, because you've already got those procedures, policies, the pen testing and everything is already in place. For the businesses that haven't done that, I mean, you know, you'd want to actually make sure that you're doing that anyway, you know, as best practice within your organization. So I think that's probably what we've seen is, you know, you've got the foundations there. The rest of it comes easy. And I would probably keep stressing, make sure you know your use case, because your use case is going to be the driving factor for what you should do, and also then what access model you need as well.
Thanks, Adam. Two more questions I'd like to cover from the Q&A. The first one's from Karthik. The banks and financial services organizations don't seem to have taken this up enthusiastically, amidst concerns on how pay-to or smart pull payments will work with the CDR framework. I think this question goes to Jill again. What measures or features are being planned to be brought in to protect the consumer from APP scams?
First of all, does anyone know what APP scams are? I'm like queen of acronyms, but I don't know that one. Anyway, I will answer the first part of it. It says banks and FS didn't seem to take this up amid concerns about pay to or smart pull payments working with the CDR framework. I'm going to actually totally disagree with that hypothesis. Banks and financial services organizations, like, I don't think that they've been taking it up or just going active because they have been focusing on their compliance. So most data holders have been focusing on compliance first. And then once that's settled and the dust is really starting to settle, then that's when we're looking at a major shift right now, just being like, all right, we've done that. That's our obligations. What can we do to compete? I think it's because of limited resources, focusing on, like, sure, this is great for my customers, but if I don't do this, then I get some huge, huge fines. And also you're just not doing the right thing. So I think it's just because of internal prioritization and really just the working on that strategy of, well, what's my first use case? Is it decreasing time to yes? Is it working on personal financial management and doing budgeting? That's their own internal prioritization. And then we've just seen Regional Australia Bank with like their loan application, and even CBA leading the charge on that. With CBA being the second ADI to have active status. The CBA, they're obviously very much investing because they've invested in Amber, Amber and what was it? I think Tangerine. So just really looking at like how can CDR clearly not just be banking, but extend across a consumer's whole life into energy and telco as well. So I don't think that it has anything to do with about CDR or like in terms of payments that will come. The data standards body, they literally just this past few weeks was just starting to ask questions about the security profile for that. I think that's when we'll start to look at FAPI certifications and that extra data recipient 2FA, because right now only a data holder has to do a 2FA. So that will definitely happen. So we know that that's happening. Of course, there's multiple federal reviews and reports on that, but that's more theory right now instead of like it was like something that you can actually implement. So.
Thanks, Jill. A question from Tonya. Are there any gaps in CDR data? What will you do to fill in these gaps?
So ultimately, the data comes from the data holders, and they have pages and pages of what data they have to send and what format is conformant. So it should be whether you receive data from CBA or Sutherland Credit Summerland Credit Union, it's the exact same format. So Adam's life is a whole lot easier to access it and leverage it. In the beginning, there's teething. I think it's because ACCC doesn't have a full conformance suite that they actually have to go through. But that's why so many data holders work with companies like AdaTree to actually test in pre-production and in production as well. So there's always going to be teething. I think that we're really past that phase. The data quality and speed, production data, and just overall integrity of it, I think it's really high. And then if you look at it, if you compare it against any other alternative, it blows it out of the water as well. And it's only going to get better from here. Like even last week, last month, business data came in. So that's really impressive about what all these banks are actually bringing to the table of different types of data sets to expose.
Thanks, Jill. And to close us off, I think we're going to wrap up Q&A. So just to close it off with a question from me. What are for each one of you, a quick, probably 30-second response. What are you most excited for in 2022 in CDR and beyond? Erica, you can start.
Yep, I'll go first. Bigger picture, I'm excited for all of the other industries to be involved in CDR data, but From a kind of like more personal point of view, I'm really excited. We've got, like I said, we've got 4 clients fully accredited with about a dozen more in a way. And I'm just really excited to seeing their actual use cases come to life. We've been on the journey with them from day dot, and I can't wait to see their products on the market and actually be a user myself.
Awesome. Adam?
Yeah, look, I agree. Just actually seeing the use cases come to life is going to be fantastic. And I think this is going to be the year that we see more than ever, which is going to be fantastic. The other thing is what that also means in these access models is there's a much greater adoption across fintechs and a much greater adoption across businesses in general. And what that does is that, you know, the rising tide lifts all boats. And what that does is that actually means that the more people that are using it means the more that the consumers are actually aware of it and aware of the value that it can add to them. Because at the end of the day, if the consumer doesn't consent, I mean, there's no value exchange, right? You can't access the data. So I think it's going to bring a much greater awareness this year for the first time for what it means for consumers. The industry is right across it, but are the consumers actually aware of it and also aware of what value can be added to their life through this process? So I think we're going to start to see the early adopters in that sense from a consumer level, from a consumer awareness, and that'll build into 2023 where you'll start to see a much greater and faster adoption from consumers.
Thanks, Adam. And Jill, you've done some work in CDR for good as well, so maybe cover that as well with this.
Ryan, of course, I was going to cover that. Yeah, so yeah, really similar. I want use cases to come to life, and I love it when our clients are like, you made that really easy. We couldn't have done it without you. But we just want to shorten the timeline so we can, you know, just do it in a few days. Whether it's like a production use case at full scale or even just live proof of concepts, which is cool with the representative model. So I would say, well, Australia won't be better off because we have faster loans. We will be better off because we have so many data-driven use cases that are economy-wide. And if we can help vulnerable and disadvantaged people through verified, regulated data sharing, then I think that we'll all be better off right now. Even right now with floods, how can you use it for disaster recovery? How can you verify where someone lives and verify that you're sending the money to a right account and really change someone's life? So I just think about all those different for good use cases. Eric and I are just going to be launching a CDR for good program just about for nonprofits and really social impact use cases. So we're going to be doing our part with it. And also personally, I hope that screen scraping is banned because password sharing and selling of your data when you don't know it isn't okay anymore.
Thank you. Thanks, Jill. And yeah, wrapping things up, thank you everyone for joining us today. Thank you especially to our panelists. Your passion in this space just shows from your participation in this session. It's been a pleasure moderating today's session. Do continue to follow us, each individual panelist, as well as FinTech Australia on LinkedIn, Twitter, and yeah, feel free to sign up to our newsletter as well if you're looking for more such events that we'll continue to run in the year, and hopefully more in person with restrictions easing out. And yeah, look forward to seeing you all in person. Thank you so much. And I'm going to close the session. I can see a lot more people thanking us on chat. But yes, thank you so much. Have a good day.
Everyone, cheers.